Welcome back, folks. Hope you had a pleasant weekend. I had a very busy weekend preparing lessons for you. So you'll have 10 teachings delivered to you this week. So that way we'll complete the content delivery for January. And then next Tuesday, you'll have the study notes PDF file released to you on the forum. So a lot of study time ahead of you. Okay, so that way I'll have all the lessons to you, and I'll give you this weekend and Monday and Tuesday to study. We're going to have a very brief live session next Tuesday, so I won't add into any of your required study time, so that way you can provide me a satisfaction agreement that you did in fact get the content that was promised to you for January 2017. All right, so let's take a look at the dollar index. This is a daily chart. Okay, and just as a reminder for folks, when I give you the levels to be watching, okay, these are not trade advisements. They're not panaceas. Okay, they're meant for you to study. They're meant for you to watch and see how price behaves after we've outlined them. Now, I'm showing you where the liquidity pools are on the daily chart, showing you which side of the marketplace should be drawn. Okay, in other words, I'm giving you my opinion as to what side I personally believe it's going to go, but I'm trying not to give you too many things to analyze. I want you to study on a day-by-day basis, because this is the thing you have to submit to. Watching the daily candles paint, watching them form over the period of a week or several weeks, and watching these levels be, a draw on price. Our analysis was, or my specific analysis was, the dollar index was in a consolidation with a downward bias. Okay, we didn't want to see upside. It wasn't likely to see upside. We were focusing primarily on these equal lows. That's what we've been focusing on. Okay, so two gentlemen, okay, have been sending me emails, and I'm going to reply to you openly here, that when we do these charts and I share them every day, I give lots of space, okay, for you to make your notations. So when you print your charts out, you should be printing them out. When I give them to you as daily log entries for where I see the buy side liquidity and the sell side liquidity, the argument was posed to me, well, I'm never wrong when I do this, because it's either going to go up or it's going to go down. You got to start paying a little bit more attention to the videos. They're not long videos. Matter of fact, they're less than 10 minutes now. So when I give you my opinion about what I think the market's doing, I'm actually telling you the directional bias. Where specifically is it aiming for? That's where the liquidity pools are. If it's going to be going higher, it's going up to here. If it's going down, it's going down here. Okay, so for the dollar index, we've been narrow consolidated sideways with a downside bias, reaching specifically for the liquidity pool resting below these bodies of these candles. Okay, you can see we were just one pip away from that today. The low come in at 100.17. Because they're equal body candles in here, we know that there's a liquidity pool resting below that, and the wicks are to be discounted, not concerned too much about where price may go relative to the wicks. So we also clear out the bodies over here, and I think that's the reason why we've stalled initially. I think maybe this may be some false hope that we're going to find some support back here. So we have a liquidity run here on the lows here. We have equal bodied candles over here that we're attacking, and that's what we're going to expect to see transpire going into Asia and London and into New York session tomorrow. Now, what we do after that, that's what I'm waiting to see, because I don't know genuinely what we'll see. Personally, I'd like to see some continuation that blow out at least the wick, so 99.45 is a likely downside objective, and that would really fuel foreign currencies to rally. Euro dollar, we've had this same thing in the mirror image of the dollar index. We're looking at these equal bodied candles here, and we know buy side liquidity is resting just above that, and this is where we have been eyeballing. We've been looking for this side. Okay, we have not been looking for the sell-off to go down here for the sell side liquidity. We're seeing price continuously press forward, okay, going into the buy side liquidity. Okay, so it just fell short of that also today. Today's high come in at 107.56, so just a few pips short of running up through the bodies equal highs in here. Not the wicks, just the bodies of those candles that we're focusing on primarily. Okay, so we've been focusing primarily on the buy side delivery on price, looking for price to move up into this level here. So what does that mean for you as a trader that's studying using this higher time frame chart? You want to be focusing on the delivery of price, how often it wants to go higher, how much price action is delivered on the downside, and the continuous movement towards this higher time frame liquidity pool that's resting right above here. Okay, so again, we've mentioned that we are looking for the sell side of the liquidity on the dollar index. Price has been going lower for dollar index. We mentioned that we're targeting the buy side liquidity up here, okay, for euro dollar, and euro dollar has been trading higher every day since then. Okay, we've been talking about it for over 2 weeks, and you can see the primary uptrend on price has been, in fact, what we've outlined, a steady march towards this area up here. Okay, moving over to the cable, we identified the buy side liquidity. Now I did have this level down here, okay, originally, but I moved it up here for today's presentation. So I'm going to take that off as a marker. Right now, sell side liquidity rests below these lows in here. Now I'm also referencing the fact that we had this. This is what these are types of the observations you should be having in your charts. So it's kind of like a catch-up session for you today. We have a down candle right before a little move up. Okay, so whenever you have a down candle and a candle trades above that high, that validates that as institutional buying. So they were hedging in there. You can see that candle's open in the form of a bullish order block, supports this whole price action in here. This is the sell side of the curve. Now we're on the buy side of the curve. Okay, and we were attacking the buy side liquidity. Go back and watch the video. Okay, listen, it's not meant to give you trades. Okay, it's meant to give you directional bias and also help you frame out higher time frame context behind the marketplace. What causes these trades to form? Why is the market moving? It's moving based on these higher time frame levels. The buy stops above these highs in here and back up into this order block here. We were focusing primarily on move above these candles in here. That's what we were focusing on. And the market did, in fact, wind up and trade through that here rather impressively here. Sell side liquidity rests below the lows in here. Next upside objective for buy side liquidity comes in the form of, and we'll make notations added to it now. Okay, now why am I using the body of this candle here? We had this candle deliver price on the upside. We had price deliver on the downside. So this is completely balanced out. Okay, so I'm not looking at this. The imbalance would occur with the last up candle here. This little up candle here as well. I could draw it on the bottom of that. But to get to that point, we've already delivered buy side delivery of price here. So I would be looking for price to want to reach up here with strength at 25.95. And then potentially up in the midpoint of that. Now, looking at these equal highs up here, now some of you probably think, well, that doesn't look equal to me, Michael. It's, to me, they're very close to one another. But look closer. What do you see? Anything jump off the chart? This is what should be in your charts. Every day when we're printing the cable chart, this notation should be right in here right now. I'm going to show you with a horizontal line. Most highest body of the candles, this one here, this one is equal. And this one's just a little bit short. So there's a liquidity pool resting just above these equal bodied highs. Again, disregard the wicks. Okay, that's going to be delivery for stop runs, and that's where the brokers operate most of their business models. But right in here, the bodies of the candles is what we're focusing primarily on because that's where the bulk of the liquidity is. And it's just also the equal high up here as well. So there's a lot of focus on that 27.27 level. So basically 27.30 to 27.80, okay, on the daily chart. There could be a reach up into that range, but we're targeting at this moment, we're looking for 27.27 here for a long-term continuation for cable. And again, that's on the heels if we continuously see dollar weakness. All right, looking at the Canadian dollar. Okay, dollar CAD, we saw price nicely, handsomely react off of the mean threshold of this mitigation block that was bearish. Perfect price delivery. You can't ask for anything better than that. And we've seen weakness since then. Now, we have to be mindful of this area in here. Okay, price is delivered on the downside here. This open on this candle, traded lower and then rejected it. So price was delivered on the sell side to that point. And obviously all the way down through this candle here. So we're going to frame out an area at which price could want to return to fill in. So we have fair value gap in here. Price has only been delivered on the upside after breaking this low. So we have all this area in here. Okay, so you have 32.53 and 31.90. So price could drop down into that and close in this fair value gap with this one candle going up. Okay, what we're saying is price has only been delivered on the upside. No down candles have happened since this movement up above this down candle. So this order block is valid at 31.90. We could close in this gap between 32.53 and 31.90. If it does that, we could possibly see some bounce or consolidation to continue on dollar CAD. That's what I'm looking at for right now. I don't see anything outside of that. Buy side liquidity rests above this high, and sell side liquidity rests at the mean threshold of this last down candle. So we could be, we should see 31.20 maintain any downside pressure. If it gives up 31.20, then we're going to look for a continuation and go lower on dollar CAD. But it just looks like we're going to be in a consolidation for this pair. Aussie dollar. Okay, we had last week, we had a target of 0.7580. You can see that we pretty much essentially hit that and nothing else has been delivered. Very powerful example why over here, this high is where the buy stops will be resting. All this price action, look how much there's been delivered back and forth. Okay, so this is pretty much, even though it's been lower, it's pretty much balanced out. No imbalances there, and that's why we saw 75.80 delivered and nothing been explosive beyond that, and we've just been hanging around this level. I'm uncertain as to where we're going to go for Aussie dollar at this moment. We're going to be watching gold to see if there's any influences that we would glean from that market to see Aussie dollar future price movement. And euro pound, we move down below to buy these candles in here, take out the sell side liquidity, and that's gone. And we'll probably deliver price to, well, we got two levels in here we can watch. We have the mean threshold of this down candle, and I'm eyeballing it, so it may be a little off. Just to save time, I'm eyeballing it, not using the fib. So we could use 85.65 as a mean threshold. Below that, we're going to be looking for sell side liquidity below the body of that candle right here. And that comes in the form of 84.97. So 84.95, sell side liquidity rests in the marketplace. Buy side liquidity moves back to this area here. So we can keep this one up here. That's longer term. We have buy side liquidity delivered if we get to 88.80. So there's our range on our daily chart. And which side of the marketplace does it look like it wants to pull towards? It looks like it wants to get down to here. And we'll see if it does that. In fact, be careful. We could see some rejection in here, especially if cable slows down and consolidates, allowing US dollar to consolidate as well. We can probably see euro dollar rally in that condition and then close in that little gap here, because price has only been delivered on the downside unless this becomes a breakaway gap or an exhaustion gap. And if that's the case, then we will probably see much more continuation and these lows down in here violated. And we'll have to see what we see going forward in this week. Real quick with gold, we still have that little gap up here, right in here on this down candle. This high, this low, that frames that. So we would look for price to be delivered up to that range. Silver, real quick as well, we have a little bit of a liquidity pool that would be resting just above 1750. So that could be an upside objective for the silver market. And that's all I got for you today, folks. I will see you all tomorrow at 10 a.m. Eastern Time for the New York session time live session. Bring a notepad. We're going to be talking about some important subject matter. Until then, wish you good luck and good trading.